Hey traders, over the last few weeks, we've really been shortening up our time frames, doing a lot of day trading. We don't want to be buying up at these higher highs in this asset bubble. As of last Wednesday, we shifted to a buy bias. This Friday, today, we had shifted to, and I mentioned it in the notes and in the premium video last night, that today and today alone, I had a bearish bias based upon the expiration, and that's worked out really, really nice. So every now and then during specific caution days, this isn't just some random day that I decided to flip a coin and be bearish. No, this was a caution day with really a very close to record-setting number of options expiring today. And when you look at the breakdown of the heavily weighted stocks, open interest, the stuff that I do before I make a decision about sort of a larger scale shift to, hey, let's be bearish today, like I was communicating yesterday, those kinds of shifts will occur. Even though I've got an overall bullish bias, those kinds of shifts will occur. Now, today, if you're deciding, hey, I'm just as well on the sidelines, Rog. We don't need to be doing a lot on a caution day. And, I kind of have been sort of, it stinks for me to have to tell you guys, it's another caution day, it's another caution day. But who here got their butt handed to them on any day where they forget the volatility could be behaving in a way that is above and beyond sort of the norm? And when you have those sorts of days, it's not that you won't get entries. You sure will. But the volatility is going to be greater than normal, and placing a protective stop becomes the nightmare of nightmares, because you really don't have that measuring stick reliable to hold up to the market and say, well, 68% of the time, this is what you do. 2/3 of the time, I know what you're going to do. Not on a caution day. So what do? We adapt by being more conservative, accepting that the ranges will be higher, using options to accommodate those ranges, and sometimes deciding that flat is a position. Well, what was really interesting, even though I had a bearish bias, is that the only one of our four indices that broke down today was the Dow. I was kind of bummed about that, personally. I didn't want to take a lot of size. I don't trade large anyways. But, when all is said and done, if I am in a full positioning, meaning we hit the aggro, moderate, and conservative levels across all four of the major indices, I could be in up to nearly 50 contracts, 50. For some traders, that sounds huge. For other traders, that sounds like nothing. But if all four indices go through aggro, moderate, and conservative levels, I could be up to 50 contracts, 48 actually. On a sort of low day, I'll be in approximately 20 to 24, okay? If all four were to fire across their, say, aggro entries and moderate. So it just depends on how deeply we correct and how many of the indices are triggering entries. Well, this morning, only the Dow fired a, here we go. There we go. Only the Dow fired a short within the allotted time. So what is the allotted time? Well, number one, the allotted time is for a clearing range breach. What does the word breach mean? Think of a whale breaking the surface. It could be the surface to the top. It could be the surface to the bottom. It's breaking through a resistance, breaking through a support, breaking through a barrier. All right, so what I need to remember is that I do want to operate with a bias, right? I need to keep in mind that most of the time I'm looking to the long side, but today, because of options expiration, because of the nearly record number of options expiring, and where the open interest and volume were, I was very much geared, ready to short sell on smaller size for sure, or even using options. So the short, the clearing range breach short setup is exactly on the Dow what I wanted, but only the Dow triggered the clearing range breach. Nothing else did. Nothing else gave me the criteria that I needed for a short. Well, I would have loved to have seen 4 shorts across the indices. I didn't get it. So one of the markets that looked really interesting, I thought, to the short side, especially since some of the heavily weighted stocks within it were trading pretty weak, but the NASDAQ itself overall wasn't. This is the NQ. Let's get back to, golly, let's just get back to, there we go. All right. Notice the NASDAQ did not breach in the allotted time. Again, what is the allotted time? We look at the high-low between 9:30 and 10, and then this must breach by 10:30. So I must get a breakout to the upside or to the downside by 10:30 Eastern. Otherwise, it's not a qualified breach. We ran out of time. It breached about 15 minutes too late. That is not a breach. But I could see that the markets were pretty heavy. I could see that the markets were being rejected very nicely on our V-score. I could see that the markets were breaking down through the -1 and through the mean and heading lower. So one of the things that you can do, and this is something we'll talk more about next week, is look at the heavily weighted stocks and sectors. Now let's start with the sectors, because for most traders, adapting to, say, the XLY or the XLK or the XLC from the NASDAQ is a pretty easy one, because ETFs are less like stocks. Even though they're made up of stocks, they behave more like an index. They behave more like the futures contracts, because the futures contracts are not individual stocks, but groups of stocks. XLY isn't an individual stock, it's a group of stocks. So I believe that ETF traders are very much in line with futures index contract traders. Here's the XLY breaching lower, something that the NASDAQ could not do, and yet I know this is a number, top 3 weighted sector within the NAS. Did the XLC give us a breach? So you might be thinking, what about the communications sector, Rog? If the discretionary sector gave us a breach, what about XLC? Nope, so I'll move on. We can look at XLK. It's like looking at the NASDAQ minus Amazon with a lot more weighting for credit cards like Visa and MasterCard. Did the XLK breach lower? So what I'm going to do is look for that breakdown. Nope, didn't happen there either. Okay, no problem. I could even start to look at individual stocks. Now, I'm going to stop short of that here in this video, because that's something we can discuss in an upcoming video. But I think it's really important to know that when you are trading index futures and you have a bearish bias, you want to see, for example, something like Microsoft break to the downside, not to the upside. And if it does break to the upside and I have an overall bearish take on it, am I going to take it? Nope, I will not take that long position. So individual stocks can be tricky. I would say if you're trying to make the transition that I'm going to teach you here, which is going from trading the futures contracts, but simultaneously be open to trading futures options and ETF options, that is going to be much more seamless. That's going to feel a lot more natural and easier. Okay, here's Apple breaking down. Apple is unique, gang, heavily weighted across multiple sectors. What about Amazon? So we can look at some of these heavily weighted stocks, Facebook, Google, again, all within the NASDAQ. So we started looking at the NASDAQ, no breach. XLY, XLK, XLC, who breached. Then we can even get more granular to the individual stock, which I typically, again, at this stage, will not recommend. So what did I do? Well, from the futures standpoint, the only 2 futures contracts that I actually took a shot at was, of course, the YM, because it gave me a breach retreat. I also took the Russell, because when the Russell broke down, it did not give me a clearing range breach. Okay, I was bearish, but it climbed high enough towards our mid-range of the clearing where I thought, yeah, I could actually protect risk from here. Let me show you what I mean by that. So the Russell never gave us a clearing range short. This was pretty aggressive. I would say if you're ever going to do something like this, do it with options, do it with puts and IWM. Don't necessarily do what I did and short 6 RTY. But again, in the interest of transparency, letting you know what I'm sometimes looking at. This was our zone right in here. Our zone for the, there we go. Our zone for the clearing range retreat is the 38.2, 50%, and 618 level. Well, we rallied up into that. That's a pretty good level as far as I'm concerned. And so I'll take a shot at that short. Probably aggressive, and in hindsight, I probably should have stuck with IWM puts, not the RTY. But for me, I was pretty comfortable with about the 10, 12 points of risk that I would have taken. I was like, okay, I got to risk about 11, 12 points, RTY points, $50 a point per contract. I was okay with that. I really didn't think RTY was going to rally, and so I added this to the short. But really, again, I'm going to also Monday morning quarterback myself, which is I should have bought puts in the IWM at that precise point instead of shorting the RTY. And I'm really glad I did not short the NQ. I really wasn't allowed to in any way. Although you could say, well, Rog, if you shorted the RTY like that, why not the NQ? You know what made me nervous about the NQ? And you saw that earlier when we were going through the charts. You got to take note of little things like this. Who broke to the upside? We had a number of heavily weighted stocks in the NQ that actually had clearing range breach buys. That was enough for me to say thanks but no thanks to the NQ. Even though I was bearish, I don't need more trouble on an options expiration day. I don't need to court more trouble. So what I did instead is I said, all right, what is a good alternative to the NQ? Again, not having to pick individual stocks, but what's a good alternative? XLC, XLY, XLK. XLY gave me a breach. So instead of the NQ, I played the XLY. And this is something that I personally do. You know, if you're listening to me in the morning on Tuesdays and Thursdays when I'm doing the open with you and it's like, gosh, she's typing a lot with the notes and she's entering orders. Gang, I'm entering orders in ETFs. I'm entering orders in a lot of different markets that are related to what we're doing in futures. And the more that I can bring you guys along with me, the happier I am. Because quite frankly, even though, yes, we are simpler futures, gang, I'm just simpler, period. I want to trade everything. I want you guys fluent in Forex, futures, commodities, indices, individual stocks, the options. I want you fluent in everything, because once you understand what the connective thread is between them, the entire marketplace becomes your playground. And I can say this with confidence. Had I not been fluent and fluid in multiple asset classes, I wouldn't have the career that I have. I wouldn't have the longevity of the career. I wouldn't have the opportunity. So I want to impart that on you all. I mean, we're spending the time together, so why not? So you might be here for futures, but believe me now, listen to me now, believe me later, as a mentor of mine used to say. Listen to me now, believe me later. You will, at some point, be grateful that you're thinking, all right, I'm just as comfortable in XLY as I am in NQ, because I know what's moving the XLY. Not only its relationship to the broader average, but I know that the individual stocks within the XLY are going to influence the way it works, and I get those too, and I get why the XLY might be moving in a particular manner, okay? That's going to be your true freedom as a trader. So that's something I really wanted to touch on today. We've been really focusing on short-term time frames, really focusing on day trading. My day trading is a big net, gang. The strategies are not complicated, but all the different places that I cast this net, they're related, but it's a lot. I like to play wide, not deep. I don't want to keep digging deeper and deeper and deeper into the same 2 or 3 symbols. I'd rather look at 13 symbols and cherry pick from the best. So I hope this is starting to click more, because we've really been spending a lot of time on this topic of day trading. Again, when I do have an exception to our bullish bias rule, I will make it abundantly clear in the premium video and in the notes. Today is that day where I was looking for weakness. On Monday, it's right back to bullish bias, gang. However, as we close in, most especially to the 26th, 29th, and the 30th of this month, I'm going to be a little bit more cautious again, because that's the last 3 trading days of the month. And I think even starting 8 days out, which could mean starting Monday, we could start to see some significant redemptions end of month, end of quarter, retirement accounts, pensions. So I'm going to keep that in mind. Yes, I'm going to be bullish, but we could see some pressure as we wind down June. But I think July is going to be right back to asset bubble type market trading. Okay? Have a great weekend. I'll see you in the next update.